For more than a century, the ceiling on personal wealth was measured in billions. On June 12, 2026, that ceiling shattered. When SpaceX began trading on the Nasdaq, it didn't just become the largest IPO in recorded history, it minted the world's first trillionaire. Welcome to Global Pulse, your daily briefing on the stories shaping our world. Today, we're going deep on the event that Wall Street, Silicon Valley, and every major financial capital on Earth has been watching for months. This is the full story of the SpaceX IPO, how it happened, what it means, and where it goes from here. Let's start at the beginning, because to understand what happened on June 12, you have to understand what SpaceX actually built over the past 2 decades. The company was founded in 2002 with a single, audacious goal: to revolutionize space technology and, ultimately, enable people to live on other planets. In its early years, SpaceX was a scrappy startup operating on the fringes of an industry dominated by government contractors and publicly funded agencies. The Falcon 1, the company's first rocket, failed on its first launch attempt in 2006. It wouldn't reach orbit successfully until 2008. But from those early stumbles came one of the most dramatic corporate turnarounds in modern history. In 2012, the Dragon spacecraft became the first commercial vehicle to deliver cargo to the International Space Station. In 2015, SpaceX achieved something the aerospace world had never seen before. It successfully landed and recovered a Falcon 9 first-stage booster, making orbital-class rocket reusability a real, operational technology. Routine booster reflights followed from 2017 onward, fundamentally transforming the economics of getting things into orbit. By 2020, SpaceX had become the first private company to carry NASA astronauts to the ISS on a crewed mission. As of this year, the Falcon 9 and Falcon Heavy have completed over 671 launches combined, with 668 full mission successes. Falcon 9 alone is now averaging approximately 3 missions per week. The number of launches increased from 98 in 2023 to 170 in 2025. No other launch provider on Earth comes close to that cadence. But launches are only part of the story. The real engine of SpaceX's commercial rise has been Starlink, the company's satellite internet constellation. Since the first operational satellites went up in 2019, Starlink has expanded to cover over 160 countries and territories. By the first quarter of 2026, Starlink had reached 10.3 million subscribers. In 2025 alone, Starlink generated $11.39 billion in revenue, accounting for 61% of the company's total sales. It was also the only profitable division in the business last year, generating operating income of $4.42 billion. That profitability matters enormously, because SpaceX has been spending aggressively in another direction entirely. In February 2026, SpaceX completed an all-stock merger with xAI, the artificial intelligence company that also owns the X social media platform. That single transaction, valued at approximately $1.25 trillion combined, transformed SpaceX from a rocket and satellite company into something far harder to define: a hybrid of aerospace infrastructure, global broadband, and artificial intelligence development. The company's own prospectus describes 3 business segments: space, which covers launch vehicles; connectivity, which is primarily Starlink; and AI, which now includes the Grok chatbot, the X platform, and a rapidly expanding compute infrastructure. And that AI segment is where the financial complexity lives. The xAI operations posted losses exceeding $6 billion in 2025 alone, and burned another $2.5 billion in just the first quarter of 2026. The result: despite Starlink's profitability and $18.67 billion in total 2025 revenue, SpaceX posted a net loss of $4.94 billion for the full year. The company has accumulated a total deficit of $41.3 billion. So why would the largest IPO in history belong to a company that is currently losing money? That is the central question every investor, analyst, and financial journalist has been grappling with, and the answer lies in scale, trajectory, and the unprecedented vision embedded in SpaceX's pitch to public markets. Now here's the part that really matters. SpaceX filed a confidential draft registration statement with the U.S. Securities and Exchange Commission on April 1, 2026. It publicly filed its S-1 prospectus on May 20, 2026, and set its final IPO price at $135 per share on June 11, 2026. The following morning, June 12, the stock began trading on the Nasdaq under the ticker SPCX. At that price, SpaceX raised approximately $75 billion, making it the largest IPO in history by a wide margin. For comparison, Saudi Aramco's 2019 record-setting offering raised $29 billion. Alibaba's 2014 listing, long the benchmark for tech IPOs, raised $21.8 billion. SpaceX surpassed both by a factor of more than 2.5. At the IPO price of $135 per share, SpaceX's valuation reached approximately $1.77 trillion. That placed it, on day one, among the 10 most valuable publicly traded companies on Earth, trailing only Apple, Nvidia, Microsoft, Meta, Alphabet, and Amazon. On its first day of trading, the stock closed at $161 per share, a 19% jump. In the days that followed, it surged further, briefly touching an all-time high before pulling back sharply. One structural decision made this IPO unlike most large offerings. Approximately 30% of available shares were reserved for retail investors, individual members of the public, compared to the single-digit allocations typical in major IPOs. Shares were distributed through platforms including Charles Schwab, Fidelity, Robinhood, Sophie, and E*Trade. Demand was so intense that Robinhood reported record-breaking traffic on trading day, with some users experiencing service interruptions. Many retail investors received only a fraction of the shares they requested. Now let's talk about governance, because it is a defining feature of this offering. According to the company's prospectus, the founder retains control of the board and holds more than 80% of stock voting power through a supervoting share structure. SpaceX will list as a controlled company under Nasdaq rules. The prospectus also discloses a performance-based grant of up to 1 billion additional shares tied to milestones, including establishing a permanent human colony on Mars with at least 1 million inhabitants. The financial community's reaction was divided. Morningstar analysts called SpaceX significantly overvalued ahead of the listing, placing fair value at approximately $780 billion, roughly 48% below the IPO price. They cited the tiny public float, aggressive index inclusion mechanics, and unproven profitability. At the IPO valuation, investors were paying roughly 94 times trailing 2025 revenue. For context, Nvidia, itself considered richly priced, trades at around 23 times sales. Others, however, pointed to the three-engine structure of the business as justification. Starlink provides the cash flow. The launch business provides the strategic moat, with Falcon 9 remaining the most flown, lowest-cost orbital system in history. And xAI provides what some analysts have called the optionality engine, a bet on space-based artificial intelligence infrastructure at a scale no terrestrial company can easily replicate. SpaceX's own prospectus estimates its total addressable market at $28.5 trillion, describing it as the largest actionable market in human history. And there is a pipeline story worth noting. In May 2026, Anthropic signed a compute agreement with SpaceX's Colossus One data center in Memphis, Tennessee, reportedly worth $1.25 billion per month. Google separately agreed to pay $920 million per month for access to NVIDIA chips from the SpaceX infrastructure from late 2026 through mid-2029. The company has also stated plans to begin deploying orbital AI compute satellites as early as 2028. Now, what about the wealth milestone that captured global headlines? Upon the trading debut on June 12, the founder of SpaceX became the first individual in recorded history to hold a net worth exceeding $1 trillion. At peak, that figure briefly reached an estimated $1.45 trillion. The Bloomberg Billionaires Index placed the figure at $1.01 trillion, while Forbes estimated $1.1 trillion. At that level, one person's paper wealth exceeded the annual economic output of 174 of the 195 economies tracked by the International Monetary Fund. The gap between first and second place on the wealth rankings was nearly 4-1. In the weeks that followed the IPO, however, Post-listing volatility and new restrictions on a portion of separately held stock pulled the figure back below $1 trillion temporarily, illustrating just how dramatically a single company's stock movements can shift the arithmetic at that scale. What comes next? The S&P 500 will not include SpaceX for at least 12 months, as the index requires 4 consecutive quarters of positive GAAP earnings, a bar SpaceX does not currently meet. The Nasdaq 100, by contrast, revised its rules to allow SpaceX entry after just 15 trading days, provided it ranks among the top 40 constituents by market capitalization, which at its IPO valuation it almost certainly does. Analysts project 2026 revenue of between $22 and $24 billion. The 180-day lockup period for early insiders expires later this year, which could introduce additional price volatility as early shareholders gain the option to sell. Former Nasdaq chief Robert Greifeld told CNBC that the IPO has opened a window for OpenAI and Anthropic to follow SpaceX to the public markets, potentially before the end of 2026. Here is the broader picture worth holding on to. For the past 2 decades, SpaceX operated entirely outside public markets, accessible only to venture capital firms, institutional investors, and a small circle of private shareholders. The June 2026 IPO changed that. It gave everyday investors their first direct opportunity to participate in the company's future. And it forced public disclosure of financial details that, as a private company, SpaceX had never been required to share with the world. As one analyst put it, this is a sobering moment. Public markets place more weight on profits and practical business models than private investors do. Going public means submitting to a level of quarterly scrutiny that a company of SpaceX's ambitions has never faced before. Whether the $1.77 trillion valuation proves justified, whether the rockets, the satellites, and the artificial intelligence come together as envisioned, is a question that will take years to answer. What we know now is this: a company founded with almost nothing, that failed on its first launch, built a rocket that changed the cost of reaching orbit, wrapped a satellite internet service around the planet, merged with an AI company, and then sold shares to the public in the largest offering in stock market history. Whatever one thinks of the valuation, the trajectory is unlike anything the commercial space age has produced before. The story of how a private rocket company became a public market colossus is still being written. And now, for the first time, the public gets to hold a piece of it. That is your deep dive for today. If you found this valuable, subscribe to Global Pulse and hit the bell so you never miss a headline.